Welcome back to Billionaire Briefing. Today, we're diving into the life and lessons of one of the greatest financial minds the world has ever seen, Warren Buffett. Known as the Oracle of Omaha, Buffett transformed a struggling textile company into one of the most powerful conglomerates on Earth, Berkshire Hathaway. But his journey wasn't an overnight success. It was built on patience, discipline, and timeless investing principles. Let's break down how Buffett became a billionaire icon and what you can learn from his incredible story. Warren Buffett was born in 1930 in Omaha, Nebraska. His father was a stockbroker, and his mother worked hard to keep the family afloat during tough times. From a young age, Warren showed an unusual fascination with numbers and money. While most kids were playing baseball, Buffett was selling newspapers, gum, and Coca-Cola to earn extra cash. By the time he was a teenager, he had already bought his first stock, and even filed his first tax return at age 14. This early hunger for business set the stage for his future empire. After college, Buffett studied under legendary investor Benjamin Graham, who taught him the foundations of value investing. This philosophy was simple but powerful. Buy strong companies when they're undervalued, then hold them for the long term. Warren briefly worked as an investment analyst, but soon started his own partnership. In the early 1960s, he spotted an opportunity in a struggling textile firm called Berkshire Hathaway. Instead of walking away, he bought control of the company and slowly reshaped it into something far greater than anyone imagined. Berkshire Hathaway became Buffett's canvas. Instead of focusing on textiles, he transformed it into a holding company, using it to buy businesses he admired. His philosophy? Invest in companies with strong leadership, durable products, and long-term potential. Over the decades, Berkshire acquired stakes in Coca-Cola, American Express, Apple, and even companies like Dairy Queen and GEICO. Each decision was guided by patience, discipline, and the belief that time in the market beats timing the market. So, what makes Warren Buffett's strategy so successful? Buy and hold. Buffett rarely sells his investments. He believes wealth is built by holding on to great businesses for decades. Focus on fundamentals. Instead of chasing trends, he looks at earnings, leadership quality, and whether a company has what he calls a moat, something that protects it from competitors. Patience in crises. During market crashes, while others panic, Buffett looks for bargains. For example, during the 2008 financial crisis, he made bold investments in companies that others had abandoned, and those bets paid off massively. Diversification with purpose. Unlike many investors who scatter money everywhere, Buffett carefully selects businesses he truly understands, creating a strong but focused portfolio. Buffett's path wasn't without setbacks. He lost billions during the 2008 crash and was criticized for avoiding tech stocks during the dot-com boom. But unlike many who went bankrupt chasing trends, Buffett stayed true to his philosophy. Even when others laughed at his cautious style, he proved them wrong by consistently bouncing back stronger. His ability to stay calm while the market was in chaos is one of his greatest strengths. What can we take away from Buffett's story? Think long-term. Success doesn't happen overnight. Buffett's fortune was built over decades of patience. Do your homework. Never invest in something you don't understand. Stay disciplined. Don't let emotions guide financial decisions. Value quality over quantity. One great company is worth more than 10 average ones. Stay humble. Despite being worth over $100 billion, Buffett still lives in the same modest house he bought in the 1950s. Warren Buffett's story isn't just about getting rich. It's about building wealth with wisdom, discipline, and humility. From selling newspapers as a kid to becoming one of the world's wealthiest investors, his life proves that anyone can succeed if they're willing to think long-term, avoid shortcuts, and stick to solid principles. So, next time you're tempted to chase quick money, remember Buffett's words. The stock market is a device for transferring money from the impatient to the patient. Thanks for watching Billionaire Briefing. If you enjoyed this breakdown of Warren Buffett's journey, hit that like button, subscribe, and stay tuned for more billionaire success stories.